Welcome to RANsquawk's morning briefing for Monday, the 9th of November 2009. Just taking a review of the overnight news. Firstly, starting off in Asia, you did see one of the rating agencies, Moody's Investors Services, they actually raised the outlook on China's A1 rating to positive from stable. Reasoning there, they were praising its economic performance in the past year during the global financial crisis. Elsewhere, we did see in the UK the G20 meeting at St Andrews, mainly saying that Britain has secured assurances from the rest of the G20 that there will be no global reduction in financial support for world economies until it's clear that any nascent recovery is sustainable. The agreement was made at the meeting this weekend, driven by concerns over unemployment and uneven growth in the short term. Separately as well, US Treasury Secretary Geithner also opposed the utility of tax on financial transactions as a way to dampen risky banks' behaviour, something that was brought up by the UK Prime Minister Gordon Brown. Elsewhere in US commentary for the weekend, Fed's Bullard said that the Federal Reserve could remove some of their extraordinary support it has extended to the US economy once the recovery looks solid and monthly job growth has returned, and he would no longer favour tightening monetary policy before recovery was well established. Bullard also said that uncertainty over the outlook for inflation is as high as it has ever been since 1980s. Elsewhere, we have seen so far this morning some significant dollar index weakness, or dollar weakness in general, down around 0.8%. Had come under renewed pressure from emerging market currencies, and the euro, after the meeting of G20 officials this weekend, failed to address concrete action on rebalancing global money flows. Also as well, getting quite a bit of attention was commentary from the IMF from the weekend, who also said that dollar funding carry trade may still be overvalued, which did lead to some dollar sales in the Asian session. With that dollar weakness in particular, we've seen the pound being a big beneficiary of that. The cable currency pair already up over 200 pips, back above 168 handles, so the highest we've been in around 3 months in cable. Allied to the general dollar weakness, we've also had a lot of speculation now that the last 25 billion increase from the Bank of England in their QE programme will be their final, having seen the duration of those purchases slow to 3 months. That allied as well to what we're looking for in equities, a revised or formalised offer from Kraft in their bid for Cadbury's. So that M&A news also pound supportive, and some stops were triggered, according to analysts, on the upside through that break of 168. Elsewhere in WTI crude futures, obviously with the dollar index lower, that has buoyed commodities. Record highs once again in terms of spot gold prices, making a firm break on that 1,100 level. And then elsewhere as well, WTI is already up over $1 at 78.69 at last check. In terms of UK markets, as already mentioned briefly, we have seen in regards to that Tobin tax of the weekend being dismissed by Geithner. However, The Guardian reports this morning that Alistair Darling, the Treasury Chancellor, the Chancellor has backed Brown's Tobin tax despite the cold shoulder they did receive from the US at the weekend. At the moment, though, taking a look at gilts, we are seeing some outperformance against European government bonds. That's mainly due to the recommencing of the gilt purchases by the BOE. We'll see around 2:45 this afternoon. They're looking to purchase 10 to 25-year securities for £1.7 billion worth. In equities, we're already up for a positive start to the week, around 1 to 1.25% in the FTSE CAC and DAX, predominantly led then by the basic material stocks with a decent bounce in the energy and commodities across the board. In particular as well, Allianz is one of the best gainers both in Germany and across Europe, after they posted a Q3 net income pre-market today of 1.32 billion, above the expected 1.25. However, worth noting in the FTSE, one bank in particular, Lloyds, they are underperforming their peers. That was after the Sunday Times revealed that the company is being kept afloat with £165 billion of loans and guarantees from the Bank of England and other central banks from around the world. They're down around 1% or so. Taking a look then, the calendar is pretty quiet for today. Volumes have been reflected in bunds, very much on the thin side. We're looking out next for German industrial production at 11 o'clock London time. No major 130s or 3 o'clock from the US. We'll have Canadian housing starts at 1:15 and employment trends in the US at 3 o'clock. Speaker-wise, we're looking out for anything more from finance ministers who could be scheduled throughout the day. No set time for that. We'll have that reverse auction to BOE at 2:45 London time. And then as well, one thing that will be underpinning or a cloud over the treasury markets in the US this week will be that record in terms of 3, 10 and 30-year notes. We'll see the 3-year today for $40 billion worth, usual time. We'll see the headlines around 6 London, so midday in Chicago.